Okay guys, welcome back for another trader development series video. Okay, now this one's going to be a little bit longer because there's a bit more going to be involved. Okay, it's going to be talking about to you, Dennis, that's in the group, about you were talking about potential short because of breaker structure. I also want to talk to Paul Scaff, all right, because I want to sort of go through how we're sort of looking at some trades which don't necessarily meet the criteria in our trade plan, but we're able to trade them, right, and how we're looking at the chart differently. And I'm also going to be talking about how we as mentors are even liable for screwing up sometimes. And I'm going to go through that, how I got an entry, closed it early, looked for another opportunity, and then got stopped out before things moved on. Right. So on the chart, on the screen here, we've got GBP JPY on a 15-minute chart. Okay. We're clearly in an uptrend, and what I want to point out here is this trend line right here. Okay, now we do not teach trend lines. We're not interested in trend lines at all. Okay, this is just for this video, just to illustrate what's going on with this chart. Okay, now on the way up this trend, you'll notice there's lows in place. Okay, there's lows here, and also here. Okay, now underneath all these lows there's liquidity. Okay, and if the market wants to drive much higher, it needs to run liquidity first in order to get that push. Okay, so if I just play just a couple of candles, okay, we came down, we bounced on the trend line, then we drove through it. Okay, then the next few candles right there. Okay, and I think that's the peak there. Yeah, okay, so that's the peak right there. Okay, now, looking at the drop, we had a run as far as, let's have a look, this low right here. Okay, so it took out the stops underneath here, here, and here. Okay, with that one run down there. Okay, now, talking about Dennis. Okay, so Dennis is one of the members in the group. Okay, this is not to pick on Dennis. This is just to sort of highlight why we weren't looking for shorts. He was saying we've got a breaker structure. Could we potentially see shorts here? The reason we weren't looking for shorts is because there was no stop run that took place above these highs. Okay, if there was a stop run, then it drove down, the liquidity above these highs would have been taken, and then we'd be looking for lower prices. Okay, so with this drive down here, all it was doing was scooping up all the liquidity underneath here, ready to go long. Okay, eventually we had the bounce. Okay, and this was on the 20th. Oh, 19th is it? Let's have a look. 19th of May, yep. Yeah. Okay, now Baz in the group, so Bastian, one of our traders, he was eyeing up this load level right there, okay, because it had a price acceleration zone in it. So that was his entry point when price came back down, okay, and he was looking to target these highs, okay. Right, so what I want to point out here now, can you see how we're bouncing along this trend line again, right? So what retail is seeing now, we've had a rejection of underneath the trend line. We're now bouncing on top of it. So stops are now accumulating underneath here. Okay, we're waiting for a drive through into this point here in order to go long and target these levels here. Okay, so okay, so that was Bastian's entry right there. Okay, I missed this entry on London. Okay, so this was 9:45. So this is an hour and 45 minutes into London Open. Now this is why you need to be looking at the 15-minute and 1 hour charts in London, because you get a better idea of what the bigger picture is doing. Okay, now if you've seen this on a 5-minute chart, you might have seen this as a stop run coming down, going short. You can get caught up in all sorts of stuff on the 5-minute chart, right? But for this trade now, I'm going to break down to a 5-minute chart and show you how I use the 5-minute chart within London. Okay, so I've already got my higher time frame targets, stop run, understand what the higher time frame's going, missed this entry point here. Okay, so if I drop down to a 5-minute chart now I'm not saying do this, guys, right? It's just the way I got into the market yesterday. Okay, we now see that we bounced at that level. Okay, now if you wanted to get in, once you get the bounce at the interest level, you get a bounce, you're looking for an optimal trade entry, or what they call a 62% retracement. Okay, so for the ICT guys, he calls it an OTE. Okay, so one candle at a time. That would have been your optimal trade entry coming in right there. Okay, now I missed that point here. didn't take that candle, it was on that candle there. That was my entry point. Okay, so if I was looking to go hold till target, which I should have done really rather than play around, that would have been my stop loss. Okay, and then my target would have been sitting above here. Okay, so you're looking at about between an 8 and 9 to 1 roughly. Okay, I'm not going to go too into detail about the RRs on it. Okay, but going through this now, so to Paul, sometimes we get trades that we understand the higher time frame direction where we're trying to get to. Okay, we understand where the liquidity is getting ran here and here. Okay, so this level here and this level here. Okay, we've got our entry points, we've got targets above here, and above here. Okay, and this is the higher time frame target that we're looking at. Okay, so once we've got the entry point there, price did start to move. Okay, so coming into New York now, this is where I was looking to take my profit. So I took my profit off on that candle there. Okay, that was my original one. The idea was then I was looking for a move below these lows here to get into that load level to go long again, but we didn't get it. Okay, so all along, Baz is still holding this position from down here. And this is really important, right, guys? What I want you to understand is when you're looking at a trade, like yesterday, this trade messed up because I was in the group having a chat, discussing other ideas as a potential. I was already in down here. I should have just waited and left it alone and just walked away. Okay, but I didn't. I got involved in the group, started having a chat, started bouncing different ideas around, and you don't stick to your own analysis. Okay, so ended up closing that position there. I think it was about 2 to 1. Can't really remember. Okay, now the trade I took after this was on the break. So let me just get a long position. It was on the break of that load level there. Okay, again, talking in the group, not really thinking about what we're doing. My stop loss was sitting underneath there, and if I was really thinking about it, really focused, I would have realised that we've actually got a load level sitting right there that hadn't been retested. There's a small price acceleration zone in there that needed to be retested. All right, so this was my second position for yesterday. Okay, and eventually price came down. It did tag me out right there. It tested that load level a couple of times. Okay, and then it just started to take off. I'm going to speed this right up now so we can get rid of the price. Okay, so price really took off after it stopped me out, and I was just in the wrong trade, wrong position, wrong entry point and everything. So this is how we can mess up sometimes, being distracted, not thinking about what you're doing and things like that. Okay, so if I go to a 15-minute chart now, you've now got that load level that I did get in on the break and got stopped out on. Okay, this is that load level now on the 15-minute chart that caused the break of the highs. Okay, down, pull back, rally away. Okay, so that's the one you're now looking for today, would have been the entry point. Okay, so we're going now into today. Okay, starting to put lows in here, see them? Okay, there's your entry point right there. So that would have been the retest of yesterday's load level. This is where you need a 15-minute and 1-hour chart in London. Okay, and then price just took off from there. That was the entry point from there, took off from there, and now we're working our way up to these targets up here, right, guys? So hopefully this video, I know it's a little bit longer and a little bit different than the other videos I've done for trader development, but I need to sort of explain a little bit how we mess up and why we weren't looking for shorts and why we still had this target in play and things like that. Okay, so this is where price is currently at now. It's getting, it's going into New York on Friday, the 21st, so I don't think we're going to make this target this week. If anyone's still holding it, they need to be thinking about closing it before market close, all right, guys? So that will do it for this video. I will see you in the next one.